Link your credit card for better financial insights. Hi, I'm Ricky Cool from Cool Bookkeeping, and I'm here today with a QuickBooks quick tip. Let's get started. So a very common scenario that I see that happens with my clients is that they ask me, should they link their credit card accounts? And the short answer to that is absolutely. Let me show you a very common thing that happens. Oftentimes when one of my clients gets a credit card bill, they will go into their accounts and they will do a new check. And they'll write the check. Let's say we wrote the check to Chase Credit Card and it came out of our checking account. But when they get down here to the category, they make a new expense category called credit card. And this is incorrect, and there's a number of reasons why. In this particular case, the last payment they made was for $1,749.18. And we don't want to do it this way, and the reason is it won't show up on the profit and loss correctly. Let me bring up a profit and loss report so that you can see how this works. So here's a fictitious company called Craig's Design and Landscape Services, and this is their profit and loss for year-to-date 2025. On the top of the profit and loss, you have the income items, design income, discounts, job material. And if we take all of the income and subtract the cost of goods sold, we get the gross profits, $9,795.77. However, we have operating expenses, as all businesses do. And when we take out the operating expenses, we see that for year-to-date, Craig's Design and Landscaping is operating with an $858.12 loss so far for the year. So we need to ask ourselves some questions. Are we going to have the prices increase? Are we going to have to find new vendors and suppliers for our materials because our costs are too high? Do we need to lay off employees because we need to remain profitable as a company? No one goes into business to lose money. You go into business to make money. So here's how we're going to have to do this. We need to look at all of our cost of goods sold and make sure that we're getting the best prices we can here. But then also, this is where you'll probably have a lot more leverage, is down here. Try to find expenses that are reducible. So we have this item here that shows up that simply says credit card, and it's $2,500.58. Well, what were these expenses for? Well, if we click on these, we can get a drill down, is what it's called in QuickBooks. But all we've seen here now is that on March the 1st, we made a $250 payment to Chase Credit Card. On April the 1st, $501.40. And then on May the 1st, $1,749.18. But what were these expenses for? Were they job materials? Were they employee spending that we don't know anything about? At this point, the only thing you could do would be go to your bank or go to your bank's website, the credit card's website, download a statement and go through each of the items on those charge cards one by one. And I have some clients that this would be very time consuming. One of my clients has 30 plus credit cards linked to their accounts that different employees use throughout the year. One of the ways that this often gets recorded is this way, is they'll say, oh, well, this is an expense and it should go down as a credit card expense. That's not the correct way to do it. Here's the correct way to do it instead. If you go to your transactions page and then bank transactions, this is a screen you might be familiar with. So we have a link to our bank's checking account, and this is the bank feed. So we have 25 items that QuickBooks has downloaded from the bank's online website to show us the items that have been deposited into our account or withdrawn from our account and where they go. And you know this. Here in this particular case, we have a Books by Bessie. We received $55 for them. We're just going to say this was maybe design income and categorize that, add it. And so now that disappears from our feed and it's gone into the checkbook register, and it will show up properly on the profit and loss statement. Same thing happens with the savings account, But this is the one I want to get to right here. This one has been done properly because this MasterCard account has been linked. Let me show you where you would go to do that. Right here we have an item called Link Account, and if you click that button, you'll start an interview with QuickBooks to ask you who is the bank that you want to be able to link your credit card account to. You do this exactly the same way as you would add a checking account or a savings account. Now, it's not going to let me do this here because this is a sample account, and if I click that, it's going to tell me that I need a regular subscription, so we're not going to be able to link that there. But it's a very simple process, and you can go online, answer the questions. One thing I do need to mention, you will need to have access to the username, the password, and also an email address or a cell phone number that is linked to that credit card account so that you can be able to authorize QuickBooks to be able to do that. So let's go back to our screen here. In our MasterCard account, you can see now that QuickBooks has downloaded every transaction just as it was supposed to be downloaded, just the same as we do in the checking feed. So we know that our Amazon charges are generally for, let's say, office expenses. So we're going to put that in the office expense category. We know that Laura's lamination was money that we spent because we had advertising. She created some posters for us. So we'll add her to advertising, excuse me. And on down we could go through this list. So let me show you now how those transactions come out on our reports. I'm going to go back to our profit and loss statement. And now in the profit and loss statement, the transactions that we just added are going to show up here. We have an item here called advertising, and if I drill down there, we can see how we come across the Laura's lamination that we just added from the bank feed, even though it was added from the MasterCard feed. Now here's a logical question. When I go in and pay my credit card bill, how do I categorize this transaction? That's a very good question. Let me show you how it's done. So most of the time, most of you will go to the new and then check. You're going to write a check or an EFT to your credit card company. So I'm just going to put in here that we're paying Chase credit card, and we're paying it from the checking account, and here's the payment date. For the check number, I'm just going to put the letters EFT there to let me know that this was done with an electronic funds transfer. But you see, this is the old credit card expense category that we had previously used, and that is not correct. We don't want to use an expense category there because remember, we've already recorded the individual expenses that are going to make up this account. Instead, we're going to reference the MasterCard credit card account itself, because QuickBooks, it says we're taking the money from the checking account and we're paying it to the MasterCard account. We're going to save and close this window, and when that happens, two things are done in QuickBooks in the background. Let me pull up the chart of accounts so you can see what happened. First of all, in the checking account, we see in the register that there was an entry made for the MasterCard account. On 7/21, we did an EFT transaction to Chase credit card for this amount of money. But if we go over to the MasterCard register, we can also see that it recorded on the 21st an EFT to Chase credit card and recorded it as a payment. So now if we pull up our balance sheet, it's properly recorded. Let me just pull one up here. So we have our checking account, our asset here. Down here on the bottom, we have our MasterCard account. And if we click in the MasterCard account, now we can see the individual transactions that constitute that expense. So the credit card should be showing up on the MasterCard account. So I hope that helps. I hope it clarifies some of the errors that you've been making. Same thing often happens if you're working with an employee reimbursement. I often see clients who will put on as the expense category just reimbursement. Well, reimbursement doesn't help us break it down. Was this fuel cost? Was this a hotel expense? Was it meals? Was it an airfare? Was it job materials? You would need to know those sorts of questions. So if you're using expense categories that just say reimbursement or credit card, that's not very helpful. I hope that helps you a good deal. If it did, press the subscribe button because I intend on leaving other videos here to help my clients and others find out how to use QuickBooks better. Thank you for now. We'll see you later.